Hello everyone. Good morning. Welcome to Offices Adda 24/7. My name is Niharika Walia Bhatnagar and I am with you with the area of AFM, that is Accounting and Financial Management. Acha everyone, what are we going to do today? Today we'll be talking about accounting and financial management. Since in the last class I started with ratio analysis, I am going to work further with ratio analysis only. So let's start with this particular chapter in detail. Okay. So, what is it about? In the last class, we talked about a few ratios. I'll be focusing upon the next level of ratios today. First is, okay, here comes the first question. Everyone, what would be the answer? In this balance sheet, the debt equity ratio is 2:1. The amount of long-term sources is 12 lakh. Okay, and they're asking what is the amount of tangible net worth of the firm. One thing is called debt. This is called debt, and this is called equity. The ratio is 2:1, and we have got that the debt part is what? 12 lakhs. So can I say 12 divided by equity is equal to 2 upon 1? You know? Okay, I'm writing it here, everyone. Debt upon equity is equal to 2:1 is equal to 12 lakh divided by equity. So in this case, it's gonna be 12. So equity will go up and it is 12 divided by 2. It comes out to be 6 lakhs. Got the answer, everyone? So in this case, what's going to be the correct answer? The equity portion is going to be 6 lakhs. Yeah, it is going to be 6 lakhs only. The answer is wrong there. Okay, it is 6 lakhs. Acha. Everybody, the next question there. The current assets upon current liabilities. Current assets are of 4 lakh. Current liabilities are of 2 lakh. This part is given to us. If I have to find out the current ratio, can we do that easily? Yeah, we can. What we need to do is C upon CL. It is going to be 2:1. If in this question they would have also asked about the current ratio. In that case, the current ratio would have been 2:1. Now they are also asking you about what is the liquid ratio. Under liquid ratio, we have liquid assets. What is the formula for liquid assets, everyone? In the liquid assets, we take all the current assets minus our inventory. Inventory is of 50,000 rupees. So from 4 lakh, remove that 50, it is 3,50,000 divided by 2 lakh. What's the answer then? 3,50,000 divided by 2 lakh. It turns out to be 3,50,000 divided by 2 lakh. Turns out to be 1.75:1. So the answer is 1.75:1. Okay, so the correct answer would be D, everyone. Difference between current ratio and liquid ratio is in this we take all the current assets. Here we take current assets but excluding two things. One is inventory, because inventory takes a long time to sell, and one is prepaid expenses divided by current liabilities. Done. Proprietors funds or shareholders funds is equal to. What do you mean by shareholder funds? Liabilities approach share capital plus reserves and surplus. Liability approach is share capital minus reserves and surplus. Liability approach is share capital divided by surplus. Achha, share capital includes two things. That is equity and preference. It includes equity share capital and preference share capital. Reserves and surplus includes all the specific and general reserves. Number one, specific reserves, the reserves which are for use only for specific purpose, and general reserves which are used only for general purposes. general purpose, specific purpose, and there would be one more. General reserve, specific reserve, and this will also include surplus. These are reserves now. It is called reserves and surplus. In the area of surplus, we include our profit. If we make an immense amount of good amount of profit, that would be called profit there. So in this case, the answer is going to be B. No, B has deduction now. It would be A. Liabilities approach is share capital plus reserves and surplus. Next question. We have fixed assets. We have current assets. We have equity share capital, reserves, long-term debts. Now find out the proprietary ratio. Proprietary ratio would mean the ratio of the proprietor. Proprietor means the owner of the organization. So how do we find this value? It is going to be proprietary ratio is going to be the part of proprietor upon total assets. So the total assets can be 5 lakh is fixed assets, 3 lakh is current assets. So can I say the total assets can be what? 8 lakhs. And what is the portion of shares there? If I look at the share of the shareholder, what is the part? Share here means the part that he has in the total capital there. He is having, as I told you in the previous question as well, shareholder funds includes 4 lakh and 2 lakh. You know, it's gonna be 6 lakh divided by 8 lakh in terms of percentage. So this is going to be proprietary ratio is equal to equity share capital divided by total assets or total liabilities, whatever way you look forward to, because both are equal ultimately. Now, total assets is equal to total liabilities. So in this case, the answer is going to be equity share capital. Total assets is 8 lakh. And equity was 4 lakh plus 2 lakh, that was 6 lakhs. So this comes out to be 6 divided by 8, that is 0.75, or I can say 75%. So proprietary ratio is normally calculated in the area of percentages. Done everyone? Let's look at the next question. We are given the opening inventory of 11 lakh, closing inventory of 1 lakh 50, purchases of 6 lakh, carriage of 25,000, wages, and they want you to calculate the ITR, that is inventory turnover ratio. How do we calculate it, everyone? The inventory turnover ratio? Inventory turnover ratio or ITR is equal to COGS divided by average stock. That's the formula. Okay, so let's look at this particular question, everyone. When we are trying to find the COGS is equal to opening stock, the formula for it, plus purchases plus direct expenses minus closing stock. So in this case, what do we have? 11 lakh plus 6 lakh, opening stock plus purchase. Carriage is a direct expense, everyone, plus 25,000 plus 2 lakh. And what do we have here? 11 plus 6, 17, and then minus the closing stock of 1 lakh 50,000. Okay, so what would be the answer in this case? The answer is going to be 11 lakh plus 6 lakhs plus 25,000 plus 2 lakh minus 1,50,000. So it's gonna be 17,75,000, everyone. Once we have got this amount of 17,75,000, this is our COGS. What is our average stock? Average stock is going to be 1 lakh, opening is 11 lakh, plus closing is 1,50,000 divided by 2. It is 6,25,000. So what's going to be the answer? 17,75,000 divided by 6,25,000 is equal to 2.84. Uh-oh. I think I made a mistake in some calculations there. Opening inventory is 11 lakh. Yeah, it is 11 lakh. And closing is hardly 1,50,000. Probably there's a mistake in the question while calculating it. So 11 lakh plus we had purchases of 6 lakh plus we paid carriage plus wages minus 1,50,000. Yeah, it turns out to be 17,75,000 only. This is correct. Now let's look at the opening and closing inventory. It is 12,50,000 divided by 2. 625,000. So in this case, yeah, it's gonna be this only 17,75,000 divided by 625,000. That is 2.84 times. It is going to be 2.84 times. Probably the mistake is there because this should be 1 lakh as per the question there. The answer would be 2.84 times, everyone. Calculation mistake. Okay. Next question. Which ratio indicates the proportion of profit distributed as dividends to the shareholders? Dividend yield, earning per share, or price to earning ratio, or ROE. पता है PE is a very important ratio not only for ratio analysis but also in terms of the chapter module D as well. Then you'll study in the CIIB as well. मतलब if you are investing time in PE ratio na, you're gonna use it in multiple areas. But in this case, we are talking about the dividend to shareholders. When you are giving dividend to the people, yield is basically what? How do you define the term yield, everyone? Dividend yield can be the income that you are receiving. So in this case, it is going to be the dividend yield. That dividend would be received by the shareholder. For a shareholder, this is income, isn't it? So in this case, the correct answer is going to be the dividend yield. Done? Next question. Which of the following ratios measure the overall efficiency of the company in generating profits from its assets? ROI, ROA, then GP or NP? What would be the correct answer? Which of the following ratios measure the overall efficiency of generating profits? That is return on assets, everyone. What is the money that we are receiving on the total assets which are invested in the organization? ROI is your profit divided by capital employed, that is your share capital plus long-term funds, while assets is all the assets. You take the profits and you divide it by the assets of the organization. So in this case, it's going to be ROA. Acha, everyone, the assets that we are using, we would always be interested in knowing now whether the assets that we are using in the business, are they turning into a beneficial situation, or they are being over exploited, or we are just not able to do anything about it. है ना? So in this case, ROA, if it is good amount, na, it is actually better for the organization. That means we are making good amount of money out of it. What is the purpose of the ratio analysis of in the financial management, everyone? In the area of FM, what is the purpose of ratio analysis? See, ratio analysis is super important. Why? To evaluate the performance of the employees. It has nothing to do with employees, everyone. To assess the liquidity, profitability, and solvency, we can say that. To determine the market share of a company, no. There's only one specific kind of ratio which talks about this. That is market test ratios, but it does not determine the market share. It just determines your market stability, your market share, the situation of that organization in the market. Nothing else. Huh? It allows us to calculate the tax liability of a company. If we talk about the tax liability of a company, how do we specify it? What is the purpose of ratio analysis? Ratio analysis is just to find out the analysis of the organization. But this is actually a very strong tool of the financial analysis. Under financial analysis, we have comparative and common size statements, we have trend series, we have ratio analysis, and even CFS, cash flow statement, is also part of this. So in this case, it is done to assess the liquidity, profitability, as well as solvency of a company. If the revenue from operations RFO is rupees 1,60,000 and GP is rupees 40,000 and they want you to find the GP ratio. What's the ratio that is in this case, everyone? GP would be GP divided by sales, and this is normally calculated in percentage. This is a profitability ratio. So it's gonna be 40,000 divided by 1,60,000. In terms of percentage, it comes out to be 25. It's going to be 25%. Next, which of the following is to measure the efficiency of the management of the company in managing its accounts receivable? What do you mean by accounts receivable, everyone? Accounts receivable are debtors and bills receivable. Somewhere down the line, you don't really have to think much, because if it is exclusively for accounts receivable, it's gonna be the ratio related to that only. Debtors plus bills of exchange. So in this case, it's gonna be accounts receivable turnover ratio. So it's gonna be B. Next question, everyone. The last question for the day. Company's liquid assets are of 5 lakh, current assets are of current liabilities are of 3 lakh. Thereafter, it paid payables of 1 lakh. Okay, this was 5 lakh, and this was 1 lakh. No, this was 3 lakh. Out of 3 lakh, we have paid 1 lakh, and cash is also gone. One creditor is gone, the cash is also gone for the same. So it's gonna be 4 lakh divided by 2. So it's gonna be 2:1, because quick ratio is quick assets divided by current liabilities. Okay, so that's the answer. Chaliye, that's it for the day, everyone. Let's end the session here. I hope you had been learning well in terms of your examination. So what can we do right now to help you out in terms of your exam preparation? you can go on to our website, that is www.adda247.com. Go on to the website www.adda247.com. Go on to this area. Next point is go on to the area of JIB and CIB. In the area of JIB and CIB, open up the area of JIB and CIB. There, open up for the JIB October 2023, and here comes the double validity. The double validity is for a limited period of time. What you can do is you can take up this double Mahapack. Mahapack is for, you can take it for 3 months, more than 6 plus 6 months, it will be available for 12. Then 12 months, it would be available for 24. So you can take up the mock test, 520 video lectures, ebooks, and 600 hours of live classes. So you can take this up. This has got everything. All the batches that are going on, English, bilingual, MCQs, test series, marathons, mega marathon, mini marathon, doubt class, and whatnot. Everything is related to this area along with the revision classes as well. So you take this one and everything else is covered in this. So if you're looking forward to it, then kindly check it out on our website or in our app for further details, everyone.